Is Latin America and the Caribbean on a great venture capital adventure? Venture capital investment has been increasing in the region. In 2021, it peaked, reaching over 30 times the capital invested in the 5 previous years. The 2021 investment has seeded a region-wide network of investors, companies, entrepreneurs, and talent that will continue to fuel the ecosystem in years to come. Local financial services, e-commerce, healthcare, and edtech are seen as burgeoning industries for investment. To fully maximize this momentum, the region must maintain and enhance regulatory reforms governments have been making to enable business growth and increase diversity and inclusion in their startup ecosystems. Let's take advantage of digital opportunities to expand globally.
Let me embark on this exciting journey by inviting on stage our moderator for this panel, Jeannie Wang, Digital Communication Advisor and Media Influencer, Argentina. Ladies and gentlemen, put your hands together as we welcome Jeannie. And of course, her esteemed panel, Josefa Marzo Pons, Portfolio Director, Colonia Venture Partners, Spain, Jocelyn Cortez-Young, Managing Partner and Founder, Minerva Capital Group, USA, Christine Chan, Venture Partner, Rallycap Ventures, USA, David Johnson, Partner, PAG Law, USA, Matthias Barbero, Head of Operations and Partnership at Mana Tech, USA. Over to you, Jeannie.
Thank you. Hi, good morning. Thank you for the kind introduction as well. Actually, I wanted to ask you a big applause for our hosts for doing an incredible job. Our new host and also Dr. Terry Carell. I'm really honored to be in this summit and especially in this panel, so thank you IDB as well. I have so many questions. I'm sure you do too, about the outlook for investments in Latin America and the Caribbean. Whether you're a venture capitalist or you have a startup, this panel is just for you because we're going to take a look at the investment trends in the region and also innovative ideas that are gaining interest and money, obviously. But obviously, this is not a piece of cake. There are challenges for entrepreneurs to access funding and mentoring, and we are going to share advice from the top experts. But wait, we're going to speak and talk about something that is trending topic today. What? What is it? Trending topic today? Yes, AI, of course, artificial intelligence, but also diversity and inclusion in the startup environment and how this could make your startup more successful. We're really privileged to have the best panel today for these topics. So I invite you to check out the official website, O2LAC.com, in order to learn more about our panelists. So we're going to start with our first panelist, who is David Johnson. Hi, welcome, David. There has been a boom in venture investment in Latin America and the Caribbean since 2020. What were the causes of this surge, David?
Thank you, Jeannie, and hello, everyone. It's a pleasure to be with you today. Depending on whose stats you look at, there certainly has been a boom since 2020. One set of numbers I looked at over the past few days said that assets under management by venture capital firms in Latin America went from approximately $7.3 billion in 2020, and by 2022 it increased by over 50% to close to $11.5 billion. So that's quite impressive growth, especially when you consider the realities that we were living under during that period. JFK once said in an entirely different context that success has many fathers. And that's certainly true in this instance for the growth in the VC industry. On the sort of investor side, it's clear that one of the triggers for the boom was the SoftBank fund, which was founded. The first fund was in 2019 for $5 billion. And then that was followed up 2 years later by a second fund for $3 billion. And that really, in addition to obviously adding liquidity into the system, really brought to the world's attention the opportunities that existed in Latin America and the Caribbean. Opportunities that we all in this room already knew existed, but really focused the industry. That was also sort of joined by the fact that there was a lot of dry powder in the industry. So there was a lot of money and expertise. Valuations in Silicon Valley were very frothy, so people were looking for alternatives. And they found that in Latin America and the Caribbean, they could get much better valuations for their investments and get into great companies as a result. On the supply side, as I mentioned, there were a lot of great companies looking for financing. The conditions in the markets were ripe for growth. You had a relatively young infrastructure system that was sort of a ripe target for investment. You have a large and underserved market. And then, of course, COVID changed the way we all lived, the way we all interacted with each other, the way we engaged with commerce. So, again, sort of really spurred on the development of fintech in particular, and on the back of fintech came a lot of ancillary and related businesses. So, COVID was obviously a significant game changer. So from a macro perspective, I would say those were the factors.
Wow, thank you, David, for your insight. So there is this opportunity in LATAM, and you want to grab it. Now, let's move on to Josefa Marza Pons. Welcome, Josefa. Bienvenida, because she's coming from Spain. Josefa, apart from giving money, which is very important, of course, how else could venture capital firms assist startups?
I think now it's working. Well, thank you very much for having me. Apart from money, is, I think, the most important part of our job with startups. But apart from money, I think there are other very important things to take into consideration. The first thing is alignment with the fund needs to be aligned with the entrepreneur. First of all, you are partners. I mean, you put the money in and you are partners, and this is kind of a marriage. So you need to find alignment in your culture and also in your values, because this sometimes goes very well and sometimes it goes very bad. And you want somebody that you can trust, that can see ahead, and you need to value what they value. And if it doesn't work, it's really going to be a very tough fight. So that I would say that is the first thing. You need to find somebody that is aligned with what your vision is and what your values are. The second thing is advice. The one thing that investors have is that they have invested in many companies usually, or they have a previous experience, and that is what we can is the experience and the advice that investors can give. And sometimes it's not only your experience, but the experience of other entrepreneurs that are in our portfolios and have had the same problems you've had in the past, and that communities that we build and that knowledge that we get from all the ecosystem, I think that is our job to give it back to the entrepreneurs that we support. And this advice can be about many different things. You can advise about strategic things like how to build a board or an advisory board, how to retain talent. I think we've been speaking about talent a lot. It's super important. So how to keep talent, how to get the best talent, how to make your employees happy and aligned with you. That is very important. And then I think this is also about connections. And this is about helping your portfolio companies getting clients, getting partnerships. And the most important part is getting new investors in, because this is how this business works. We invest in people, and then other people invest in them. So I think that's more or less what you should be looking for.
Oh, thank you very much, Josefa. Who in the audience has a startup? Okay, great. I'm sure that many of our audiences identify with what you said, Josefa. Okay, my next question is to Christine Chang. Hi, welcome, Christine. Even though we are talking about positive developments, the truth is that small and medium-sized businesses still lack investment and crucial support. Why, Christine?
Thank you, Jeannie, and thank you for the invitation to this event. Esperanza, great job for putting this together. And yeah, we're talking about venture capital, but venture capital is not always the only way to fund your business, and venture capital isn't necessarily for everyone. So that's something very, very important to remember, because especially in this boom that we saw from 2020, everybody was talking about VC. You were seeing in the news all the time that so-and-so raised a round on a PowerPoint, et cetera. So there was a lot of FOMO in the market, and everybody said, well, I have to raise from venture capitalists as well, and that's not necessarily true. And exactly what you mentioned, Jeannie, there still exists a very big funding gap for micro, small, medium enterprises in emerging markets like Latin America and Caribbean. In fact, the latest figures that we have are it's a $1.2 trillion funding gap that still exists. We've heard in other sessions, I think a lot of us know this, that the GDP, the majority of the GDP generated in our countries is from small and medium-sized businesses, and yet they don't have adequate access to funding. Why? Informality, again, we've heard from other panelists, it's still a cash-based economy. A lot of small businesses are very informal by choice or not by choice. And so that makes it very hard for a lender to underwrite this business, because you don't have a complete photo of everything that they do. You don't have a complete photo of all the cash flow. So that's one part, is the informality and high use of cash. Another part that many panelists have also talked about is financial literacy. So education, the last panel ended with education, education, education. Certainly true not only for consumers, but also for small businesses, because a lot of times, you know, you created your small business because you're really good at what you do, whether it's selling something or making something, and maybe you're not so focused on the financial management part of things. So that also makes it difficult, because some people, a lot of small business owners don't even apply for a loan. And that's because maybe they don't understand it that well, or also another reason is because there's very high interest. A lot of times the loans that are available, the financing that's available comes with a very, very high interest rate, and that's because this vicious cycle of where the righteous have to pay for the sinners, right? So if somebody defaults on their loan, then you have to build that into your financial model as a lender, and therefore you have higher interest rates. And then also you have just in general inadequate products for the market. It's interesting to know that about 25 to 30% of the $1.2 trillion funding gap for MSMEs in the region is represented by women-owned or women-led companies. And there's a lot of reasons for that, but one of the reasons is because the products may not be adequate for that market. And no offense to the gentleman in the room, but typically we have gentlemen who are designing the financial services and products for the region, and so there may be a lack of understanding in what is actually the correct product for the market. A lot of times, thank you, the people who are designing the products and services, and even for us, right, us who are the privilege to be on this side of the table, is I don't really know at a core level, right, what a small shopkeeper may or may not need, because I haven't walked a mile in their shoes. So the inadequacy of products for the market is another reason for the financing gap. And I just want to mention that at RallyCap, what we invest in is early stage fintech infrastructure. And it may sound very far away from how it can address this problem of the financing gap. But what we believe is that if we can actually change the financial infrastructure, meaning the payment rails, meaning the way that money moves, meaning the way that fintechs, financial institutions, and even non-financial institutions are offering financial products and services, then we can actually create change, right? So if we can make it cheaper, faster, easier for fintechs and financial institutions to deliver these products, that's where we can actually impact change. So I'll give some examples because it might be a little bit abstract, but for example, one of our portfolio companies is Cintaj, based in Mexico, and they take SAT data, which is basically the Hacienda, the IRS, the IRS equivalent in Mexico, and they provide alternative data so that lenders can have a fuller picture of cash flow, so addressing one of the problems that I talked about before. We also invested in Belvo, which is a company that does open finance, open banking, and that allows for lenders to better prospect, evaluate, underwrite, service the loans that they're underwriting. Pomelo, which allows it to be much easier for fintechs, financial institutions, and even retailers to spin up their own credit card programs. And so those are just some of the examples on how RallyCap Ventures, we are hoping to impact this funding gap for MSMEs in the region.
Wow, interesting, Christine. Thank you for your insight. Yeah, you can express yourself, of course. And thank you for, participating also in the panel. Feel free to do it. Okay, now on to Matias Barbeiro. Matias, you're Argentine, so you know very well the Latin reality, but also you work in the US, in Miami, precisely.
Right. Yes, yes.
The place of Messi now.
Yeah, that's another excuse now to go to
Miami.
Miami.
Argentine, you must be really happy for that.
So I can say a lot of things now about Miami, but the reality is that, Messi is there, so, you gotta go and visit now that place, right?
Do Jamaicans like football? No?
Yes?
Yes?
Yeah.
I cannot hear you. Do you like football? Yes? No? Okay. So, now back to our panel. Matias, could you please help us understand the connection between the Miami startup ecosystem and Latin tech economy? And where is it heading in the coming years?
Right. So thanks, everyone. Thanks, Jeannie. Thanks, panel here. Thanks, the IDV as well. So in regards to interconnectivity, the connection between Latin America and Miami, specifically the US, I always like to say that there's such a huge demand from businesses, CTOs, C-level, based in Miami, but basically US people, right? Decision makers for the tech and talent emerging from our countries. And I say our because I'm Argentinian, right? So there's that interconnectivity in terms of businesses. They really see value in the things that we are creating, crafting, modeling, and they're not only looking to kind of like acquire those kind of like businesses and incorporate those technologies to the businesses itself, but then also invest, right? So there's a genuine demand for, as I was saying, tech and talent. And then also there's, Miami, we see Miami in my team as the middle point between Latin America and the United States, right? So there's also a physical, geographical, I would say, interconnectivity between both areas. And the most important thing when it comes to interconnectivity and connection is like, each of you, you've probably been to Miami, right? And you guys, you'll probably feel comfortable there. And that's because of the cultural affinity. That's a huge asset for our ecosystem. Having decision makers being Latinos, people that move from, hard economies, hard situations, being able to establish themselves in Miami, or again, United States, they want to, I feel this on a daily basis, right? They want to kind of like give back. And that's important because they want to support you guys. They want to support your businesses. They want to support you as founders, as VCs, as corporates, as governments, even as non-governments. And right, so we see Miami, and we envision Miami as the middle point between the 33 countries in Latin America and the United States. So the cultural affinity, right, is very important. You guys
probably you feel warm because you speak obviously in Spanish. Obviously you will end up signing contracts in English and stuff, but when you start doing those businesses, you feel warm. And in reply to your second question, Jeannie, where are we going? So since we identified these three things, as I was saying, demand for tech and talent, you know, Miami being geographically, you know, in the middle between both, and this cultural aspect, which I don't think you, I mean, I don't want to speak about other ecosystem, but let's say like Miami has that big asset, as I was saying. Where are we going? We are kind of like building this physical infrastructure in Miami to bridge both things. So yeah, there can be, you know, demand, as I was saying, we can be in the middle, we can accelerate businesses and stuff, but moving forward with Manatech, we are, you know, crafting, building, and modeling this sort of like a tech hub to bridge, Latin America and United States. So what we did is like, we invested heavily in downtown Miami. We kind of like we are providing that physical infrastructure through 80 different properties and building to sort of like create this Silicon Valley. So what I see in the next 3, 4, 5 years, in the upcoming years, I envision Miami. Actually, Miami is said to be the tech hub, the ultimate entrepreneurial hub to bridge the 33 fragmented economies of Latin America and United States. So eventually it's Latin America to the rest of the world and vice versa, like, you know, the rest of the world with Latin America. So, and again, the last thing I wanted to say is like, obviously, Miami feels like it's a place for collaboration. And that's where, you know, once you connect the 33 countries with United States and you create like a big economy and everyone collaborates, then investors and other economies start seeing like, oh, it's no longer Colombia, it's no longer, you know, only Jamaica, it's not only Argentina by itself. It's like everything and all the communities are working together. So there's a huge interconnectivity. It's just a matter of bringing all together, and we are happy to provide that infrastructure in, you know, in downtown Miami, specifically in Flagler District. So thank you.
Thank you, Matías, for your insight, and good to know more about the Miami's tech hub.
Right.
Okay, let's talk about the social aspect of this. So my question goes to Jocelyn Cortez-Young. Welcome, Jocelyn.
Thank you.
Jocelyn, when we see Minerva's website, it says, we are a purpose-driven fund with a human-centric and data-driven approach to empower humanity. So, how does Minerva balance for-profit investing and its social goals?
Wow, it's a heavy question. First and foremost, thank you to the IDB for having me, for having this event. Jam Pro as well. It has been an absolute pleasure to be here in Jamaica. I have enjoyed really all my meetings, everyone I have met with so far. And Jeannie, thank you for leading this panel. I don't know if everybody knows, she's an incredible influencer and has combined so many different universes as far as Korea, Asia, Argentina, now here in Jamaica. Wow. So it's always nice to see those things. So to answer your question, if I may, let me just go back a little bit in time. The world, you know, has always, so Minerva Capital focuses on the intersection of technology and social impact. And we started 14 years ago, and we focus mainly on late venture stage private equity. So we're not in early startups, we're not in pre-seed. I rely on my counterparts here to help us find fantastic opportunities. But the reason why I say that is because to analyze an opportunity and the social impact that it has, I would say it's a 3-step process. First and foremost, you need to know your own risk tolerance as a group, as an investor group. Because when you focus on social impact areas, you really need to know how far out on the risk paradigm you're willing to go. Are you going nonprofit to the most rural areas, or are you creating social impact at scale? So you need to define that before you go into the market, before you're looking at opportunities. The second part is you need to understand the model, the business model of the company that you are looking at. For example, does it have the ability to collect data? Do you know what data is available from the functionality of what the company is doing, the interactions, who they are servicing, where they are going with the product or service that they are doing? What's the data? What can we do with that data? And obviously, that's also part of the discussions that we have had in this panel, which is the future of data is AI, and the future of AI is even more capabilities, and more capabilities at scale. So we placed a bet on the intersection of technology and social impact 14 years ago, and we placed a bet that this would manifest mostly in emerging markets. The reason for that is because it is the place where you can go from analog to digital at scale. And so if this is clear to you as a group, as a thesis, then when you start to look at different opportunities and different companies, you start looking by verticals, at different vertical spaces. So therefore, how do you create social impact? You have to be able to collect the data and understand what are the changes that you're making, who is it that you're servicing, and then that brings me to my third point, which is after you make the investment, it is incredibly important that you support the company that you have invested in so that they can actually take effect of the mandate. So in other words, you are supporting them to get through those social impact goals. You're supporting them to be able to get the technology that is needed to collect the data. You're supporting them to introduce them to all the groups that are third parties, IBD, to be able to manifest what they're trying to do at scale. So I would say those are the three parts, before and after. And obviously social impact is a very broad term, but as a group, you must have it for yourselves defined as to what it is, the top 2 or 3 things that you're looking out to change.
Thank you for sharing your tips to keep the balance, which is difficult, of course. Okay, I'd like to focus now on challenges, and I'm going back to you, Josefa. What are some of the unique challenges in investing in innovation? Because it changes so fast, there are so many uncertainties, regulatory obstacles. Josefa.
I think the most important, I'm going to talk about 3 R's. One is resistance, the other one is resources, and the third one is risk. So the first one is the human resistance to change. In general, we don't love change. In Spanish, we say, más vale malo conocido que bueno por conocer. Like, it's better, like the bad known than the good unknown. And that is like something you have, like, they tell you since you are a little child. So that, I think, is the first thing. And this is, I mean, when we are talking about innovation, we are talking about dreaming. We are talking about making a better future for our communities. So you have to get people excited, and you have to buy them into the change. And that is a challenge. And so that takes me to the second one, which is resources. You need people, and you need money. Money is important, and I think it's important to understand what profitability is going to bring that innovation. And sometimes it's difficult to understand how you're going to monetize. And that is what Jocelyn was saying. It's very important to understand what is the path to making money so people can invest into that. Or why would you fund an NGO? Because what's going to happen? What is going to make that innovation make better lives for the people? And that is money. Then the second one is people, is talent. I think we've been speaking about finding the right talent. Skilling the right talent is very important. It's very hard. I mean, I think we've talked about how difficult it is to get money. And there are not many startups here, but I can tell you that in the last years, the conversation was always about programmers. We don't find people that can program, and finding programmers, it's a challenge. So you need to find people to do the job. Then the third one would be all the risks that come when you are building the future and the long term that means. And mitigating those risks is something that you need to understand and work with that. And I think that is going to the next question.
Great, thank you, Josefa, for your clear picture of the situation. And sometimes law and regulations have an important role in this. So, David, what regulatory changes would you point us as effective in facilitating investment, and what changes are still pending?
Thank you. You know, three thoughts sort of struck me from the sessions yesterday. They're somewhat relevant to this. The first was on one of the plenaries, the gentleman made mention of Singapore's experience with their avionics industry, and how with purposeful sort of attention to the development of that industry, they took a world-leading position. And that's sort of my thought on the regulatory side, looking at Latin America and the Caribbean. It's not a would like to have, or, you know, we're working towards. It's really an imperative, and we have to view it as such. The other observation I had was looking back at the VC industry. Many people may not know that, you know, for much of until the 1980s, Boston was the center of innovation in the US. It still is now for biotech, but it had a much larger slice of the industry. And things moved out to Silicon Valley. Some would say largely because California does not enforce non-compete agreements. So it was a very sort of friendly posture for founders relative to Boston. Now we see, looking at the industry, there's a move somewhat back east, thanks to, in some part, to guys like Matti, but taxes, business-friendly or unfriendly taxes, causing people in California to look to Miami, to look to Austin, to some degree to look to New York. And the point I make there is, again, it's the sort of unintended consequences of poor regulation, some would say. So when you put all these things together and you see what works, it's really in places where you have purpose, you know, where laws are purposeful, where they're facilitative, and when they're comprehensive and they're all working together, you have a successful regulatory framework. You know, we've seen that in some jurisdictions. You know, for example, in Brazil, I think in 2019, they introduced an ombudsman to sort of serve as a single point of contact for inward investment, for inbound investment. I see JAMPRO has that model here now as well. And so there are, you know, models out there, both old and new, of countries that have focused on the overall intent of driving forward investment. And that sometimes it gets granular in terms of certain specific industries. Central bank regulations, you see, in Brazil again just recently passed a law regulating crypto. And, you know, they're thinking of a digital currency as early as next year. But these are, you know, the other point from yesterday was we're all dancing, but to a slightly different tune, in, you know, in the sense that for the countries across the region. We're at different stages of development. And everyone will hopefully sort of get to the right place, but would be naive to think that everyone is working at the same pace and we'll get there together. But generally speaking, an incentive-based regulatory framework seems to be the way forward, a comprehensive regulatory framework, which we now see being implemented in so many countries. On the other side, you need regulations to also take care of the founders, right? As Christine said, venture capital may not be for everyone, but we can certainly do more to democratize it. It shouldn't only be the educated and wealthy who can do a startup, right? So we need to have regulations in place that don't make failing in VC pretty much a life sentence in terms of your family's resources. In some countries, you still have debtors' prisons, for example. You still have personal guarantees as conditions for getting financing. These things are real impediments to founders. We talked about women, and we talked about, sort of the underserved and whatnot. We need to have a regulatory outlook recognizing that venture, as properly understood, most companies fail. We don't say that here, but in the US, good 70 to 80% of the companies that get funded ultimately don't succeed. So venture is a tough game, and it makes you wonder what is appropriate for this market, whether it's venture or it's sort of more like, Bollywood's relationship with Hollywood, sort of inspired by, but not exactly the same, right? You can definitely see the connection, but, we have to rethink what we mean when we talk about venture for these markets, particularly the smaller countries and the smaller markets.
Thank you, David, for your comments. Now, let's go back to Miami with Matias. Matias, even though there are these challenges, how is Manatech contributing to LATAM technologies thriving in Miami or in the US? And how this helps attract venture capital?
Right. So, kind of like as I was saying before, we sort of like believe in this connection between Latin America and United States, and that's why we invested millions, if not billions, like heavily in crafting, building, and developing and envisioning, this Silicon Valley for the Americas, right? So we successfully developed Winwood back in the days. That's also was, one of the founders of that neighborhood was Moish Mana, who envisioned to create that cultural hub. And what we are trying to do there in downtown, it's sort of like the same thing, but shifting to technologies. So we want this place to become the home for Latin American entrepreneurs, founders, venture capital firms, corporates, governments, non-governments. I can give you a couple of examples. Of course, Silicon Valley. And, well, Jeannie, well, your sister works there, and Rebecca. But what I was trying to say, most of you, probably people from Brazil, even from France we have today, Cubo or Station F, those are the kind of things that we want to kind of like copy, but kind of like extrapolate and do in Miami. But, try to do it in as I was saying, in a full neighborhood, in the different properties that we have. So again, the full goal of this is eventually connect Latin America with United States and the rest of the world, and again, the same thing, the rest of the world, to see Miami as a hub to connect with Latin America. And how we're doing this, I'll be really short. We're working this through 4 vehicles. I like to call it 4 vehicles, because we feel like that's the only way that we can collaborate with all of the stakeholders in the entrepreneurial ecosystems, and those are programs. We accelerate technological companies in Miami. We support them with their landing in the US. We also do events. The thing, we are very happy to be here today in Jamaica. But we do, a bunch of different technological events, and we are set to bring, more and more. So it's not only, 2 days. We are having so much fun here and enjoying this fantastic country, but we want that to have happen on a frequently basis. And the key thing here, and the game-changing thing here, is that we have, again, the spaces and the infrastructure to hold that, so that you can go eventually every single day and you're going to have activities and things, and if you're a founder, you can get into programs. And, you know, in reply to your second question, Jeannie, we are not only launching our venture capital with focus in agri-food tech and climate tech, you know, to fulfill the gap of Series A that these companies, you know, are struggling to raise in Latin America. So we're looking to co-invest with venture capital firms in Latin America in this specific sector, agri-food tech and climate tech. Actually, we have our demo day in 10 minutes. And more importantly, as I was saying before, once you connect physically and technologically, Latin America and US, you start seeing, like, for example, venture capital firms and, you know, family offices and stuff coming from the Middle East. So they start seeing, as I was saying before, they don't no longer see Latin America as, oh, it's just Colombia, it's just Jamaica, it's just Argentina. No, they see it as a whole. They see it as a 1.1 billion people economy. And that's a game changer. We are providing that infrastructure to make that happen, so that people from abroad really see the tech and talent that we have. And yeah, I guess that's all. I mean, I just wanted to kind of like present Manatech and present myself and leave the door open to speak with you know, with each of you guys, because we can definitely support your companies, your countries, your governments, your non-governments, you know, promote investments in each of your countries. And yeah, we're right away. I mean, just a message from distance, an email, we can definitely connect on that aspect, and I'm happy to support them. If you ever make it to Miami, walk you through what we are building there. And thanks again.
Great. As each of our panelists, you're doing a great job there. Hey, Manatech in Miami. Okay, now let's talk about another hot topic today, as we mentioned, artificial intelligence. Christine, how does this new technology enable businesses to get greater access to funding?
Well, if you add AI into your company description or into your keywords for your company, you can automatically 10x your valuation. Actually, there was this week a French startup that raised, I think it was 105 million euros to build an alternative to ChatGPT. So it is actually happening, but obviously that's not my actual advice to the entrepreneurs in the room. So I'll go really quickly because I know we're running out of time, but in terms of when we go back to the original question of the funding gap, so how AI can help there is, you know, we talked about informality and not being able to get a full picture of the business. So with AI, you can pull in different data into your models and build alternative credit scoring models, as well as segmentation. Segmentation is important because MSMEs are so diverse and disparate, so it's actually really hard to serve this market. There's a reason why traditional FIs don't serve this market, because it's not the same a sort of mom and pop shop down the street versus, you know, a 3,000 person small company. And so AI can help have alternative cuts of data where you say, oh, actually, if I segment by zip code or industry or some other factor that wasn't immediately obvious to me, then that actually makes it easier for me to serve this market, as well as to personalize the product. So as an early stage company or startup, you can't afford to really create personalized or customized products for all of your customers, but AI can help you deliver it in a more personalized and customized way, which is also helpful. The other important aspect is minimizing human bias. So especially in emerging markets, in Latin America, definitely in Mexico, there's still very much an element of whatever data is being analyzed, and then they send somebody for an in-person visit. So automatically you have human bias. So AI can help to minimize this, as well as dashboards and BI. So we talked about financial literacy, education. So this is actually something exciting too, that you can offer your customers or small business customers dashboards and business intelligence that typically wouldn't be available to a company their size, and that will help them to learn how to manage their business, their cash flow, their operations, and make them better customers for you as well. And then I just want to touch really quick on sort of a bottoms-up approach. So for the entrepreneurs in the room, I think AI can also lower the barriers to entry. So you don't need to have a technical background to be a founder, and that is especially important for women and diverse profiles to become founders. We don't have the limitations of having to be technical. You can use AI as a tool, as well as you can sort of parlay the need for tech and marketing talent, which tends to be very costly. Josefa kind of touched on this, the last couple of years in the boom, that talent has gotten really expensive. So you can also keep your costs low at an early stage. So that also makes you more fundable because your unit economics are going to be better. And just to add, as many have said here, AI is not the answer. The answers have always existed, they're there, but you still have to ask the right questions, and that's where the human touch comes in.
Thank you, Christine, for your insight. And now, another hot issue, as we anticipated, diversity and inclusion. Jocelyn, what could venture capital do in order to promote representation of women in management, because the glass ceiling still does exist?
Oh, is that the last question?
Yes.
I think, again, it's a very open-ended discussion. It doesn't just go with one question, but set the tone, be the example is a quick answer. And also unbiased training, which is something that is more reachable. It's also something that can fall into the budgets now, is, I think, going to be a game changer going forward. And the last thing I would say, just keep in mind that diversity is not about just hiring people that are different from you. Diversity is about hiring people that see the world and have lived their lives differently than you. That is the perspective that they are bringing to the table. And that is the diversity that you are looking for. Make an effort to find people that are different and have lived a life differently than yours, and put them in the room. And for women, sit at the table, and then you will make a change.
Excellent. Thank you very much for your valuable insights. It was really a pleasure learning from you, really. So many keywords we have from this panel, right? Opportunity, deepening, Miami's tech hub, what is real diversity, fintech infrastructure, financial inclusion, so many topics and issues to think about. Enjoying the sunshine from Jamaica, right? Why not? There is a quote that I want to share with you from the movie The Godfather, El Padrino in español. Have you seen that movie? Yes, sure. It says, great men are not born great, they grow great. So we could rephrase now, great investors and great entrepreneurs are not born great, they grow great. We hope that this panel could help you grow great. Thank you for your undivided attention. I wish you all the success. Thank you. Back to our MCs.